This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on Friday, November 21st, 2014. Our time is 8:43 Mountain. Our radio show is on prior to the Eskimo and Calgary Stampeder Western Final. Pre-game coming up at 1 o'clock with the very own Dave Campbell and Morley Scott. If we win, the Eskimos are off to the Grey Cup in British Columbia. Go Eskimos, go. Don't forget, you can listen to our radio show. If you ever miss a radio show, they are archived on Harold's websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Go to iTunes, type in The World Financial Report on Radio. Subscribe to the podcast. We go on any portable device. We're portable. Our show goes anywhere you do. Connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com. His telephone number to speak with him personally and privately, 1-800-432-1022, 1-800-432-1022. And this week, we have just an absolutely stunning featured diamond. Harold was saying it's really only one of two that they have ever seen in the history of rarecoloreddiamonds.com. It's a .51 carat radiant cut, fancy intense orange. And it's a mix of red and yellow. We'll talk more about it, and we'll also talk about how colored diamonds have been such a great investment when compared to the stock market over the last 9 to 10 years. We have some staggering numbers you do not want to miss later in the show. As we tape today's show, China cut interest rates to improve their economy. Also, head of the EU Finance, Mario Draghi, says that the EU needs to get inflation higher and faster. They're fighting deflation. The EU bank balance sheet, they need to get it back to the 2012 level. They need to add 1 trillion euros of liquidity to be pumped into Europe to fight deflation. And one of the shocking stories that came out this week, of course, we have that big vote in Switzerland coming up at the end of the month. We'll talk about that during the show. But the Ukraine admits its gold is gone. There's almost no gold left in the central bank vault. In an interview on Ukraine TV, none other than the head of the Ukraine Central Bank made the stunning admission that in the vaults of the central bank, there's almost no gold left. There's a small amount of gold bullion left, but it's just 1% of reserves. As Ukraine further reports, this stunning revelation means that not only has the Ukraine been quietly depleting its gold throughout the year, but that the latest official number, according to which the Ukraine gold was 8 times higher than reported, the 1%, was fabricated, and the real number is about 90% lower. Harold, this is something that we've talked about for a long time, and that is, do the people who say they have the gold really have it? We really believe that a lot of gold has moved from the west to the far east, and countries saying that they have the reserves, as we're finding out here today with the Ukraine, they don't have it. And if there was a count of the gold, I think people would be shocked as to where it is dispersed, mainly over in the Far East, India and China, not in North America or Europe. And a lot of what's going on was just basically a smoke and mirror show, and we finally have proof of that coming out of the Ukraine.
You bet, Randy. It's really unbelievable. But then again, we saw that with Germany earlier in the year, too. All of their gold is gone, and that was supposed to be held here in the United States. So a lot of things are happening in the gold market. Again, gold has been a suspect market for a long, long time now. You know, gold back 13 years ago was at $250, went all the way to $1,900. Then it fell back in 2011 to $1,180, and that was an orchestrated move by the exchanges. and now gold is floundering. This week was actually a very good week for gold. We're back over 1,200, traded today as high as 1,208. It's up $9.60 on the day. They're saying that the increase in gold and the stock market today is due to the fact that China reduced interest rates, but that really doesn't make an awful lot of sense. Why does a reduction in interest rates in China have anything to do really with gold? Because what it does is it strengthens the U.S. dollar against other currencies. And the reason that gold has fallen off over the last several months is because the U.S. dollar has gained steam. It's gained some strength. It's not that people are bullish on the U.S. dollar. Most people that are in the know that what's happening in the United States is going to blow up in everybody's face. The amount of debt that the U.S. is still holding still has to be addressed. So basically, the gold market has been very volatile. We did approach the 1180 level 2 weeks ago, which was very heavy support for gold. Once we broke 1180, it dropped down to around 1150, 1140, and basically the next level of support for gold is at $1,000. Even though gold's back up to 1,200, I still do believe that we're going to see lower price gold over the short term, but we're still very, very bullish on gold because there's so many situations that could spike the price of gold substantially higher. Again, we were involved in the gold market, all the way from its inception. At $250, it was our radio show that I identified gold as a strong buy at that point, and many of our Canadian clients bought gold under $300. Rode it all the way up to $1,900. There was a lot of money made in the gold market during that particular period of time. But again, the way that they brought down the price of gold, and we discussed it on last week's show, was absolutely treacherous, and the fact is it was totally illegal. But the government could do whatever they want, and they certainly did bring down the price of gold. Again, over the short term, I do believe that we could see slightly lower gold prices, but we're close to the bottom of the market. I believe 1,000 is a good price for gold, and we could see a very, very strong rally from that point. And then you've got to look at who's buying gold at this particular point. Who's buying gold right now is China. They've been buying it for a long time and seeing that gold prices have dropped off over the last couple of years. Russia is stockpiling gold and preparing for economic war, and that's economic war against the United States. Their currency is plummeting, and because of sanctions against Russia by the United States and Europe, their oil prices dropping, it's really hurt the economy in Russia tremendously. So in the last 3 months, Russia has stockpiled 55 tons of gold. Russia is doing the same, China is doing the same, and so are the central banks, which is shocking because it was really the central banks that were selling off gold in 2011 type of thing. Now, they have purchased 93 tons of gold in the third quarter. This is the central banks. That's 15 consecutive quarters that the central banks have purchased gold. There's got to be a reason for that. The reason is the central banks are buying because of geopolitical situations and to diversify away from the U.S. dollar. So that's interesting in itself. The geopolitical situations, we certainly understand. There's several of them. But diversifying away from the U.S. dollar obviously means that they also feel that the U.S. dollar is doomed to fall lower, and that's why we're still very, very bullish long-term on gold. By the end of the year, the central banks will have bought 500 tons of gold. And one of the biggest reasons for that is debt. The debt in the United States is astronomical. They may be able to manipulate the markets the way that they have over the past, couple of years to show that, the U.S. economy is strengthening, but most of us know that that is not the case. The stock market has done very, very well. However, it's not a reflection of the overall U.S. economy. If you compare the U.S. economy to the European economy, I can understand that people may think that the U.S. economy is doing better than the European countries that are in recession right now, Italy, Spain, Greece, those type of countries, and the situation in Europe is going to continue to worsen. So over the shorter term, we anticipate that the U.S. dollar will continue to strengthen. What it basically means is that investors are shorting the euro, and that's one of the reasons why the U.S. dollar is stronger. Also, we also know in Canada that the government wants a lower Canadian dollar, and that's what brought the Canadian dollar down to about 85 cents last week. Right now it's trading at about 84 cents. So we do see the possibility of the Canadian dollar dropping down to 83 cents short term against the U.S. dollar. That's why I'm saying that if the U.S. dollar strengthens over the next month or two, it could show us $1,000 in gold, and then more than likely at that point, we want to be massive buyers of physical gold. And we're going to be able to bring to you physical gold. Our deal is basically finalized. We still believe that gold is going lower, and we are finishing off our website that will allow you basically to buy gold at spot price with no commissions. We're going to bring to you the opportunity to buy physical gold, have it delivered directly to you, which is what you want, and you're going to be able to buy it at spot prices without any commission spreads or anything like that. So, again, we made a lot of money in gold and silver over the last when it rallied from 250 up to 1900, and silver went from 350 all the way up to $50. We saw the pullback in 2011, which was orchestrated by the exchanges because they couldn't deliver gold to the outstanding futures contracts and ETFs. And now we've seen the gold market fall off due to the fact that the European currency markets have fallen, and now with China reducing their interest rates, it means that their dollar is going to fall a little bit further also. However, these are all temporary situations, because with the tremendous debt that the United States still has, there is no doubt that over the longer term that the U.S. dollar is going to fall victim to all this debt situation, and we do still anticipate that the U.S. dollar will not only break back below 80 cents and possibly drop to the level that we saw in 2011 when gold hit 1900, when the U.S. dollar was trading at 72.5 cents. So basically at this particular point, I'm saying that gold could certainly back off a little bit further. We're getting close to the bottom of the market, but I'm not quite a buyer yet. And soon you're going to be able to go to our new website. We'll announce it when it's done. But you're going to be able to go onto our website. No salesman, no commissions, no nothing. You're going to be able to buy physical gold at spot price and not pay any commissions. And that's what we're bringing to our Canadian clients, is the opportunity to do well again in the gold market. So all in all, my opinion of gold has not changed in any way. In fact, recently it's getting stronger and stronger, because as much as they've been able to beat up the price of gold and silver in the paper markets, means futures markets and that type of thing, the actual physical market for gold and silver is tremendously strong. In fact, a report came out last week that the mints both in Canada and in the United States do not have enough silver and gold to mint their coins. So how in the world is gold in such a negative stance viewed by the Wall Street and that type of thing when there's no physical gold to be purchased? That's the most difficult thing to understand. And that's what we really want you to understand, is that there's two different markets. There's the paper asset market, which is manipulated by certain banks like J.P. Morgan and such, HBSC, and then you've got this actual physical market where there was a shortage of it. And that's why the market fell in the first place back in 2011, because gold and silver was so popular and making such gigantic moves that basically with every futures contract and every exchange-traded fund that is purchased, there has to be physical gold and silver to back it up. And that was just not possible back in 2011, because there was way more gold and silver purchased than existed in the world. And once the exchanges realized how severe the situation is, and they were a violation of the Commodity Exchange Act, what they did was absolutely criminal. They raised the margin requirements on gold and silver so substantially, 5 days in a row, that they made it so expensive to trade gold and silver that speculators liquidated their positions. It had absolutely nothing to do with the fundamentals of gold and silver, because at that point gold and silver were coming off lifetime highs. Gold went all the way to $1,920. How does it hit $1,920 one day and a couple weeks later is down to $1,180 when nothing changed in the marketplace? So that's basically what's happened in gold and silver. In no way, shape, or form are we disillusioned. In actual fact, I'm looking at this as a very bullish opportunity. The difference between the bull market that we saw from 2000 all the way up to 2011, where the market was an orderly bull market, we could determine which way that market was going by reading charts and stochastics and head and shoulders charts and things like that. However, that is not possible right now because the markets have been manipulated. However, the next bull market in gold and silver, which is definitely coming, will not be like that 11-year bull market. It's going to be fast, it's going to be abrupt, and it's going to be substantial. The fact is that gold will go to 2,000, and then it's going to take off and run from there. It's going to go to $3,000 to $4,000 to $5,000. You want to own the physical market. You don't want to get involved in leverage. You don't want to leverage your positions in any way. You want to hold the physical metal, and when the time is right, we'll let you know when to liquidate it. All in all, again, we think the gold could back off a little further from this point, and then at that time, we are going to be a massive buyer of gold, and by that point, our new website will be ready, and you will be able to go there and not deal with any salespeople. You'll be able to buy physical gold at spot prices, which, let's face it, the only people that can do that are refineries. We have tremendous contacts in Africa through my partner's family that have been in the mining business, both diamond and gold, for three generations now. So again, it's another situation of who you know. We've been able to work out a phenomenal situation and are just going to allow our clients that have been with us all this time to be able to buy into the gold market and not have to pay commissions, shipping charges, storage charges, anything like that. And that's coming to you very, very soon. So all in all, Randy, what I'm seeing happening now with Russia stockpiling gold, China going back in and buying gold, the fact that the central banks are buying gold is an absolute amazing situation to me, because they were net sellers for all those years before. So we're starting to see the buying in gold starting to shift, and most of it is out in China and Russia, the two areas that, again, people are looking at as far as economic strength. So I'm a firm believer, Randy, that gold's going much, much higher, and with the fact that there's a shortage of physical gold for the minting of coins, I just think that spells it out right very clear for us. We're going to see a massive rally in gold coming, and it's coming sooner than later.
Connect with Harold at rarecoloreddiamonds.com. Go take a look at the investment diamonds at rarecoloreddiamonds.com. Go to what we call a museum online with some of the finest investment diamonds, rarecoloreddiamonds.com. Speak with Harold personally and privately, 1-800-432-1022. Our featured diamond this week is a .51 carat radiant cut fancy intense orange. Harold will talk more about that later. It is a stunning diamond, and one that Harold was telling me that really only one of two that they have ever seen. Connect with Harold, rarecoloreddiamonds.com, 1-800-432-1022. There were auctions from Christie's and Sotheby's in Geneva last week, and we have auction results for diamonds. If you would like to receive them, speak with Harold. We'll be happy to get them to you. In the silver section of our free weekly newsletter, you can get our newsletter from Harold. There were two stories this week that really open up your eyes about the possibility for silver in the future increasing in price. China hunger for clean energy to leave no rooftop behind. China, the world's biggest solar market for 2 years running, is pushing to install more panels at factories, schools, and even greenhouses as it seeks to meet its goal under a historic climate agreement with the United States. China expects to install as much as 8 gigawatts of small solar systems this year, more than 10 times what was built last year. The country had almost 20 gigawatts of solar capacity at the end of 2013, a figure comparable to about 20 nuclear reactors. Most of that came from massive solar farms in remote locations, and policymakers are now promoting smaller systems closer to where they're needed. The push to promote wider use of solar rooftops comes amid growing health concerns tied to smog within its own population and from foreign companies. It also adds to the nation's push to be a leader within the global climate community. Now, what does that mean for silver? It's interesting. Stephen Lieb wrote an article this week, and he said silver is going to make a major move. And as a result, he believes we could see $100. He says most people watch the metal for the focus on gold, including myself, but silver is a fascinating metal. Silver has probably been used as a currency for longer than gold, but it also has industrial uses. It's the industry and industrial uses that I started focusing on again. And if anything, the case for silver has grown stronger. China is working on its very own serious pollution problem. To tackle this problem, one of the things China is implementing is the increased use of silver photovoltaics, and that is solar. What this means is, by 2017, demand for silver in photovoltaics alone will represent at least a staggering 18% of all silver demand. But this is where it gets interesting. The IEA, which is the International Energy Agency, likes oil. But even the IEA said the need for silver is going to be for 4 terawatts by 2050. 1 terawatt represents 1,000 gigawatts. So we're talking about a remarkable 4,000 gigawatts. What this means is that on a yearly basis, the world is going to have to triple its silver consumption for photovoltaics, solar panels. This also means that if the world stays on course that the EIA has mapped out, by 2017, photovoltaics demand could represent an astonishing 50% of silver demand. And at the end of this decade, photovoltaic demand could be close to 100%. If you take these numbers from the IEA and extrapolate them, what they are saying is the global demand for silver eventually is going to be 3 times the entire global reserves. The problem is that there isn't enough silver in the ground to supply the coming demand. And keeping in mind that this doesn't include investment demand or a myriad of other industrial uses for silver, what this means is that the price of silver and the price of companies that mine silver are headed into the stratosphere in the coming years. I can't tell you that silver can't go a bit lower, but I can tell you that 3 to 5 years from now, the price of silver will be trading well over $100. We're heading into a brave new world, so investors must own physical silver in the companies that mine silver right now ahead of the coming mania. And Harold, we have about a minute left. When I saw those 2 stories, and we've talked about this in the past, all the time that we've been doing this show, we've talked about industrial uses for silver. But we're getting to a point now, when you factor in China, it's getting really exciting.
You better believe it, Randy, again. And with the low price, you're going to really attract a lot of speculators, but speculators tend to come into the market after the fact. We want to make certain that, again, we're buying the market at the right time and buying it physically and not leveraging it and just putting it away. And again, I think that's the answer to what's going to go. There's no doubt that there's a physical shortage in the market, and when the market really kicks in again, that's why I'm saying it's going to spike up. It's not going to be an orderly market. The prices are going to be outstanding.
Connect with Harold about investing in hard assets. RareColoredDiamonds.com is his website. If you'd like to see those stories about solar out of China, we'll be happy to send them to you in our free weekly newsletter. You can go through it in 5 minutes or spend hours. It's up to you. Connect with Harold at RareColoredDiamonds.com. The telephone number 1-800-432-1022. We're going to come back and talk about diamonds, and we are about a half an hour away from the pre-game show, Eskimos Stampeders. Pre-game show at 1 o'clock with Morley Scott, Dave Campbell. Go Eskimos, go. We're very excited for this game. Hopefully we can make the Grey Cup. This is the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We'll be back right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on Friday, November 21st, 2014. Our time is 9:10 Mountain. And we are about a half an hour away from the pre-game show. Our beloved mighty Edmonton Eskimos, the green and gold, up against the Calgary Stampeders, the team we love to hate almost as much as Saskatchewan. Pre-game show, 1 o'clock with Dave Campbell and Morley Scott. And here's hoping the Eskimos, after losing to Calgary 3 times this year, can pull it off and head to the Grey Cup in Vancouver. But that's coming up right after our show. Now, when it comes to our radio show, the World Financial Report on Radio, if you ever miss one of our shows, you can catch us online on Harold's websites, HESradio.com, RareColoredDiamonds.com, the Shows are streaming there. We have a podcast through iTunes. Type in The World Financial Report on radio, and you can subscribe to the podcast, have it on your portable device. We go anywhere you do. Harold's website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. The telephone number, 1-800-432-1022. The most secure and profitable investment, millions of years in the making, Rare Colored Diamonds. See some of the world's finest investment diamonds at rarecoloreddiamonds.com. It's like a museum online. Diamonds are nature's art, private, portable, stable wealth. Speak with Harold Siegel today about starting your own diamond investment portfolio. Receive a free copy of the weekly World Financial Report on Radio newsletter. Go to rarecoloreddiamonds.com or call 1-800-432-1022, 1-800-432-1022. Our featured diamond is the rarest of the rare. If you wanted to start a diamond portfolio, this would be the one that you would want to do it with. It's a .51 carat radiant cut, fancy intense orange, and the color on it is spectacular. See it at rarecoloreddiamonds.com, featured diamond of the week, and as well, you can also see it in our free weekly newsletter. One of the stories we want to get to before Harold comments on the weekend diamonds, also this featured diamond. Colored diamonds prove to be a good investment. Fancy colored diamonds have always been highly sought after. They are extremely rare and therefore very valuable. Fancy colors are predominantly yellow, pink, and blue, and they consistently sell for record prices at auctions. A new index released here in the last month shows that the increase in value of fancy colored diamonds since 2005 has outperformed key global asset indices. If you bought a fancy colored diamond in 2005, it would have increased in value by 167% on average. Compare this with the average increase of the FTSE 100 in England, London, 36%, and the Dow in New York City at 58% over that same period of time. Obviously, colored diamonds a wise investment. The greatest growth in value was in pink diamonds, and Harold has been educating us about pink diamonds since he started rarecoloreddiamonds.com back in August of 2005 and wrote his special report. In the last 9 years, pink diamonds up 360%. Blue diamonds were up 161%, which is still a very impressive increase. It is interesting to see that both pink and blue diamonds were unaffected by the global financial crisis. Blue diamonds held their value while pink diamonds kept increasing from 2008 to 2010. Now, the index has been issued by the Fancy Color Research Foundation, which has access to tens of thousands of fancy colored diamond transactions since 2005, and it will be updated on a quarterly basis and for the first time provide a valuable insight into the fancy colored diamond market. As well, yellow diamonds in that period, Jan 5 to October 14, were up 56%. Still a very, very good rate of return. And if you're looking at a yearly rate of return, pinks were at 18.5, blues at 11.3, and yellows at 5.1. And Harold, that just killed the stock market when it came to returns.
I'm so happy about it too, Randy, because again, these are the type of diamonds that my clients own. And pink diamonds are going to do even better over the next 5 to 7 years because we all know that the Argyle mine that produces 95% of the world's pink diamonds is getting ready to close. In actual fact, statistics that came out over the last couple of weeks, including all pink diamonds, even the very, very poor quality ones to the better quality, since 2002 to 2014, in a 12-year period, the average price of pinks have increased from $13,000 a carat to $78,000 a carat. From $13,000 a carat to $78,000 a carat in the last 12 years. Even the fancy light pinks, which are nowhere near as valuable, for example, as the vivids, because the higher the saturation, the more the diamonds are worth. But a fancy light pink is a very soft and beautiful pink diamond, and they've been up 20% a year for the last 5 years in a row. That'll give you an indication as to how strong the pink diamond market is. And then on top of that, you're talking about a situation to where there's not going to be any more pink diamonds, and over the next 5 years, we anticipate that certain diamonds will increase as much as 500 to 1,000%. So we're very, very excited about that. Argyles, which are the diamonds that we've been recommending for the last 10 years, have increased in those 10-year periods. They've tripled in price. And it's only going to get better and better. In fact, the vivid pinks are starting to double every 2 years, and soon you'll see even bigger moves than that. So I'm just ecstatic about what's coming up. And 10 years ago when we started talking about the investment diamond business, nobody ever talked about the returns on diamonds. And once we did our study on them and came out with the report, Rare Colored Diamonds, the Best Kept Secret, all of a sudden it started to spur interest in the market. However, we're people within the industry, we all know that diamonds are good investment because we hold diamonds for a long period of time. But there has never been a secondary market to sell them, and that's what the problem was for diamonds. Where do you sell them? And that's what we brought to the table. We created 8 Siegel Fine Auctions, which is our online, real-time, amazing auction site that's virtual. People attend our auctions from all over the world from the comfort of their own home, and we offer diamonds all over the world. We've also been associated with some very strong charities. Back in May, we did an auction for the Susan G. Komen Breast Cancer Charity. We actually redesigned their pink ribbon and made it out of pink diamonds and pink sapphires, and they sold for fortunes, and we raised a lot of money for charity using our auction business. In fact, on December the 11th, coming up, we are holding an auction on our auction site, 8 Siegel Fine Auctions. Next week, you can go to 8 Siegel Fine Auctions and actually look at our catalog, but it's going to be for the Alliance of Kids. It's the Palm Beach Children's Hospital, and they're a phenomenal charity, and we're going to raise a lot of money for them, and you will be able to attend our auction from the comfort of your own home. Just go to hsfineauctions.com and register for the upcoming auction. In fact, there will be 5 auctions coming up over the next few months, and all charity auctions, basically, the Girl Scouts of America. We're doing an auction for a children's hospital out of California, and we're also doing an auction for Susan G. Komen coming up in January and February, and plus we have another auction coming up just before Valentine's Day. So you're going to see some magnificent colored diamond jewelry. Most of the pieces that we're offering are in sensational pieces, museum-quality pieces. And the beautiful thing about our auctions coming up, especially with our jewelry auctions that are coming up for the charities, is that these pieces are just spectacular, and they're appraised, and they're all GIA certified or EGL certified. EGL, the European Grading Labs, tend to do a really good job on grading jewelry, where GIA in New York is very good at grading individual loose stones. So we've got these auctions coming up. You're going to find that the prices are going to be outstanding. There will be pieces, for example, one of the first pieces to be auctioned off in the December 11th auction is a magnificent yellow diamond necklace. It's valued at $35,000, but the opening bid is going to be $7,000. So how in the world do we do that? It's primarily because my partners are third-generation diamond people from South America. They own their own diamond mines, so they mine their own diamonds. And that's a huge difference. So the difference between buying retail and buying through us is the difference between making money and not making money. So to be able to bid on the $35,000 yellow diamond necklace, where the opening bid's going to be $7,000, you're just going to have a lot of fun at this auction. And the closer we come to December 11th, we'll discuss more about what's being auctioned off, but it's going to be a sensational auction. I recommend everybody go and sign up. It's totally free of charge, but this is something that you're totally going to enjoy. It's going to last about an hour. You're going to see pieces that defy description, diamond jewelry that defies description, and all of these are tremendous assets. So I'm very, very excited about that. I want to talk for a couple minutes about the featured diamond. The featured diamond is one of the rarest diamonds you'll ever see in your lifetime. It's a fancy, intense orange diamond. There's no secondary colors in it. It's not a yellow orange or a yellowish orange, even though those are valuable. This is an intense orange, one of two intense oranges that we've seen. One is going to a very, very good client of ours and friend who is having it installed in a magnificent piece that we're making for him. But this is, again, one of the rarest diamonds you'll ever see in your lifetime. A pure orange diamond is a combination of red and yellow, and this particular diamond is intense in color. So it's very heavily saturated. That's why even though this is only a half a carat, it's a diamond worth a fortune, and over time will make a fortune of money. So again, some lucky buyer is going to end up this week or next week with one of the rarest diamonds in the world. And the chances of ever seeing a pure orange diamond is almost impossible because very, very few exist. But to get one as intense as this one is in color is one of the best investment diamonds we've ever shown. So we're truly excited about what's happening in the diamond market. Also want to bring one other thing to your attention. You know, we talk about diamonds as a hedge against inflation, about currency devaluation, as portable private wealth. And for most of us, portable private wealth doesn't mean anything. We're not leaving Canada or the United States to go to a different country, even though a lot of people in the United States are doing that. People with money are expatriating. They're giving up their U.S. passports and moving to other countries where laws and the economic situation are not as severe as they are in the United States at this point. And in a lot of cases, these people cannot take cash with them, so they take diamonds. Now, my partner's brother lives in Venezuela. Very, very, very successful man, worth close to $1 billion. A lot of his money, and most of his money, is in diamonds, as is mine and most of the people that we deal with, because that's my business. However, he's had to leave Venezuela recently and move to Trinidad in order to still do business in that same realm of the world type of thing. But he's literally given up all the cash that he kept in Venezuela and walked away from millions and millions of dollars because Venezuela is in horrible financial shape. So basically, fortunately for him, most of his wealth was in diamonds and was unaffected by the record high inflation that's going on in Venezuela. He explained to me just the other day that he paid over $100 for a loaf of bread. To feed his family was almost impossible. And he's leaving millions and millions and millions of dollars behind because it's not worth anything. The fact is that if the currency the valuation is as strong as it is, it could be 1,000 to 1. It means that on $1 million, you're walking away, with a few $1,000s. So basically, that's what's happening in certain parts of the world. It's happening in Russia, because they've devalued the ruble tremendously. It could happen in China. They're devaluing their currency. The Venezuelan currency is so devalued that inflation is going through the roof. And again, it's predicted that other countries are going to go through the same horrific situations. That's why diamonds and assets like diamonds are so important. You can never cross a border with more than $10,000 in cash. But $1 million diamond fits in your pocket. And if you own that diamond and you've got the paperwork for it, you have no problems crossing a border with it. So the fact is that diamonds like this are portable private wealth. The Europeans call it real estate in your pocket. One of the great investments that you could possibly make. Again, in pink diamonds over the last 12 years, they've gone from $13,000 a carat to $78,000 a carat. I know of no other asset that has done that with the safety that you have in the diamond market. On top of that, light pinks have gone up 20% for 5 years in a row. What market does that? And then Argyle pinks, which are the markets that we're recommending the strongest, have gone up 300% or tripled in price since in the last 12 years. So we're ecstatic about what's happening in the diamond market. We have some amazing auctions coming up that you want to sign up for. Again, whether you buy or not, you want to look at these auctions because it's going to expand tremendously. We've really attracted the opportunities to do very well for charities. And in return, we get introduced to very, very wealthy families, which we need to expand our business. So down the road, when our clients are ready to sell their diamonds, we have the clientele that has the money in which to buy these assets. So the fact is that diamonds continuously go up in value. Not all diamonds, but certain diamonds. When Randy talked about this new company out there that is basically determining how much diamonds have gone up over the past several years and what they're going to do in the future, it's on an average, because when we look at, for example, the very high quality diamonds, like, for example, yellow flawless diamonds, they go up by 15% a year, not 5%. But when you look at all the yellow diamonds out there, the SI1s and the VS1s and the VVS1s, they move at a certain level, but it's the very best flawless yellows that will increase by 15% a year, and that's all that we offer to our clients. We only offer the yellow flawless diamonds, the fancy yellows, the fancy intense, and the fancy vivids that will do extremely well. But these are long-term investments. You don't buy them and hold on to them for a couple of years. You're not going to make any money. You hold on to them for the longer term. My wife's girlfriend inherited a pink diamond ring from her grandmother that her grandmother bought 50 years ago for $50,000. And the diamond ring is worth $5 million today. A diamond that I bought 10 years ago, a 2-carat fancy vivid purplish pink argyle, I bought for $350,000, is now in the $3 to $3.5 million range. So these are assets you want to put away. If you don't need the money, you pass them down to the kids and grandkids. I would rather buy diamonds for my grandchildren than I would ever buy stocks for them. In fact, I have no stocks in the market whatsoever. Most of my clients own diamonds for retirement, because the fact is that they will increase more than the stock market will without any type of volatility. In actual fact, what we're going to see in pink diamonds over the next 7 years will never ever be duplicated again, because there's not another mine in existence like the Argyle mine. The Argyle mine in Western Australia produces 95% of the pink diamonds in the world, which is only 200 carats a year. It's a tiny market. But the fact is, once that mine closes in 5 years from now, the price of these diamonds will skyrocket in price. We're saying to buy them now while the prices are still reasonable, because you'll see returns on these pink diamonds like you have never seen before. And then we have another program available for our clients. Many of our clients are retired and getting no return on their money in the bank. We have a private investment company called the Natural Diamond Investment Company that deals with rough diamonds. My partners have been in the diamond mining business for 3 generations, and they own their own diamond mines. So they mine rough diamonds. They sell these diamonds to their clients that are cutters and polishers, and the cutters and polishers cut and polish these diamonds and sell them to the jewelry trade. That's what the majority of the diamond business is. We allow our clients to invest with us in this amazing business, and we pay a very, very high rate of return to our Canadian clients. Our Canadian clients that invest in this program on a 2-year basis get a return of 24% a year for 2 years, and that's in American money, meaning that if you invest $100,000 US, you're going to get back $24,000 a year US for the next 2 years, or a $48,000 return, and then the return of your capital. And what we did to solidify and to take the risk out of this investment totally is, if we raise $25 million, we put $25 million worth of rare diamonds and hard assets into a trust to ensure our clients that if, God forbid, anything ever happened, that we have the assets to back up the investment. But again, this has been going on for 3 generations, and all I did was modernized it and allowed my clients to get involved. I have clients that put in $1 million into this and get $20,000 a month U.S. When you convert that to Canadian, you're picking up another 15% a month because of the weakness in the Canadian dollar. So this is available to our clients. It's a phenomenal program that we make available to our Canadian clients at 24% a year. You get the money wired directly into your account every month. So on a $100,000 investment, you're going to get $2,000 a month U.S. deposited into your account for 24 months in a row, and then the return of your capital, and then you'll be able to do this again. It was something that we were planning on taking public, but the diamond market is so small that it didn't warrant taking public. We just wanted to reward our clients that invested with us and give them the opportunity to make a second income. And again, even on a $25,000 investment, you're still making $500 a month American deposited directly into your account. So these are the type of opportunities that we bring to our clients. We're in the hard asset market. we're in the market of owning hard assets, not paper assets. So we're in the rough diamond market. We have been for a long, long time, and our clients that are involved in the program with us are absolutely ecstatic, not only getting 24% a year in U.S. dollars, but on top of that, when you convert that back to Canadian, you're picking up another 15%. If you're interested in learning more about that, give us a call and we will discuss that with you privately. If you're interested in learning more about pink diamonds, yellow diamonds, blue diamonds, and about this featured diamond, this magnificent intense orange, contact us. We can send you our free seminar. We do online seminars that will educate you as to what the diamond market is all about. On top of that, we've got our auction coming up on December 11th and several others after that. So we have a lot of exciting things coming forward, Randy, and I couldn't be more excited about the news that's coming out about the diamond market.
It's very exciting, and we add to that last week, Christie's and Sotheby's had auctions in Geneva. We have auction results. If you would like to see those, Harold would be happy to send them to you. Our featured diamond this week from rarecoloreddiamonds.com, a .51 carat radiant cut, fancy intense orange. This is one of the most intense orange colors you will ever see in your life. Harold has said it's really only like one of two that they have ever seen. A spectacular diamond to start a diamond portfolio. Speak with Harold Siegel, Rare Colored Diamonds, about investing in the rarest of the rare, museum-quality diamonds at rarecoloreddiamonds.com. And when you talk about investing in diamonds, you have the privacy aspect, you have portability, you have estate planning, something you can pass on from generation to generation, great price stability, and good long-term growth, as we spoke about earlier in the show and even during the financial crisis. As this Fancy Color Research Foundation index is showing us, between 2008 and 10, blue diamonds and pink diamonds held their value. In fact, pink diamonds continued to go up during that very volatile period. And that's why you want to have an alternative asset class in your portfolio. We advocate hard assets like diamonds, gold, and silver. And then when it comes to dealing with diamonds, the only company you want to deal with is rarecoloreddiamonds.com. Harold brought this to our attention back in 2005. And during that time, diamonds, as we were mentioning, have turned out to be a massive, massive winner. In fact, as we were talking about pink diamonds, up from January 05 to October 2014 of this year, 360%. Blue diamonds, 161%. And then, as Harold was mentioning, they're taking all the diamonds into account when they're putting these prices together. But if it's the rarest of the rare, which Harold offers, you're talking about even higher numbers. And Harold, we have approximately 1 minute left. I know that you'll be cheering on our mighty Edmonton Eskimos. Go Eskimos against the Calgary Stampeders. Good luck to the Eskimos today.
You better believe it. Canadian football, very, very exciting. And at this time of year with all the snow and everything, it even makes it that much more exciting. Again, I want to wish everybody a wonderful weekend and a very profitable day. And thank you very much for listening to our radio show.
Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. The telephone number, 1-800-432-1022. And one of the great things about Harold, he has an open invitation for any one of our radio listeners to give him a call at any time. He will return your call and speak to you about investing in hard assets and obviously talk to you about your financial situation and why you should have hard assets like diamonds, gold, and silver in your portfolio at all times. Harold has developed the website hsfineauctions.com, and we've had many auctions which have been a massive, massive success. Speak with Harold about the next auction coming up on December the 11th. We also have our free weekly newsletter. It's the companion to our radio show. We spend a lot of time putting it together, so we have new, fresh information for you. You have an informed opinion as to profiting and protecting the money that you have. And two of the articles that I think are must-reads, and we talked about it, and they're in the silver section. It's China in relation to photovoltaics, which is solar panels, and they're talking about silver going to $100 in the years ahead, if not even further, due to silver demand being driven by solar panels in China as China ramps up the use of solar panels in the years to come. Get that article from Harold. Get the information on our featured diamond of the week, rarecoloreddiamonds.com. The telephone number 1-800-432-1022. Good luck to the Edmonton Eskimos. The pregame show with Dave Campbell and Morley Scott is next. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.